Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. It's Wednesday morning, April 28, 2021. A little bit of a choppier market yesterday, very stock specific, but we still found some good opportunities. Again, it's kind of like we're shifting days where one day is awesome, the next day is a little bit choppy, a little bit smoother on the swing trading side. I will say this though, something about swing trading that I just want to mention that seems to be a little bit of a pattern, for lack of a better way of putting it. It seems like pullbacks are giving some better opportunities than trading new fresh breakouts right now. Something to write down, something to keep an eye on. We're seeing right now, we're going to take a look at a couple of examples where some stocks have been, I wouldn't say beaten up, but maybe not in play for a while. And we're starting to see the first signs of order flow in those stocks where we've been in a downtrend for, let's say, 2 months or maybe even just consolidating. And now we're starting to see over the last 5 to 7 days, we're starting to see an increase in volume. We're starting to see what we call well bid in those stocks. And I'm going to explain this. We're going to do a quick lesson in order flow in about 5 minutes. And we're starting to see the first signs of these strong stocks over a longer period of time, breaking these downtrends where you can start to initiate what Jesse Livermore in Reminiscences of a Stock Operator called, you start to put out your first probe when you break that line of least resistance, which is the way he basically said you broke the trend. But it was a fancy way of him talking about it back then. So we're going to take a look at a couple of stocks. I'm also going to show you how I work the charts. It's one of the most common questions that I get in either the comments or in messages, which, by the way, if you find these videos helpful, definitely click down and subscribe. Give us a thumbs up. And if you have questions about any of the topics that I talk about in the video, definitely leave a comment. We always get back to you. So we're going to talk about working the charts. And I mention this all the time, especially if you're a new trader. It's very easy to get lost in all of the technology that we have now, where you're just moving averages and RSI and stochastics and everything else that's available. I always start out with working the charts. I always start out with what box are we stuck in? What trend line do we need to break in? What is the real price that the stock is fighting to get through? And I think one of the biggest confusions or mistakes, I'll just say it's a straight up mistake where you're watching a stock and then one day maybe it spikes up to this level and then all of the technical analysis books show you that, oh, all the way up there, that's the resistance level. But meanwhile, it might have traded 100 shares up there. That's not real important, that number. You need to look at where is it trying to get through? Where is it trying to get through? And you might see a couple of candles way up here, but the real level that it's struggling with is here. That's where you draw your line. That's the real level. Not only is that the right price to focus on, but you're going to get a better entry than everybody else is waiting for that nonsense number up there that 100 shares traded. And especially when you're swing trading, getting in an extra $1 or $2 earlier because you're at the right level is a monster part of trading. All right, so we're going to kick it right off. We're going to talk about Microsoft's earnings yesterday. We're going to talk about Apple and Facebook earnings today. We dive into those a little bit. So stick around. We'll be back in just 1 second. Okay, so obviously FOMC today as well. The FOMC meeting, 2 p.m. concluding today. The announcement, I don't think anybody's expecting them to do anything to rock the boat. Everything that we've read right now, the economy, getting out of the house, all that kind of stuff, including airline stocks and cruise line stocks perking up a little bit. We're going to actually dive a little bit deeper into sector analysis and discuss energy stocks, which actually meet that criteria that I was talking about before. Let's head right over to the charts, and we're going to kick it right in. And don't forget, stick around. We're going to actually do a quick lesson on order flow, because that's probably one of the biggest questions I get. It's obviously it's what I'm known for is order flow and tape reading, which, by the way, get a ton of questions about swing trading. If you want to get a 30-day trial to our swing trading alert service, you actually get lifetime access to the course when you start a subscription, and it teaches order flow and tape reading in a lot more detail in that. And you actually get your all your alerts and everything sent to your phone through the Slack app. So click below the link and definitely get started. It's only $49 for 30 days. So we're going to head on over to the charts. We're going to start out looking at the futures. And as expected, which in my years of trading, and it's actually in my game plan, 2 days, 2 situations where I usually dial back my position sizing and really drill down to stock specific stuff is options expiration and FOMC days, where it can kind of get a little bit squirrely, where it's not as obvious. So as you can see here, the futures are actually kind of just trading flat right now, pausing. Not a big deal, not going down. We're just kind of relaxing, right? So I want to talk about Apple. First, you know what? Let's talk about yesterday. Microsoft's earnings came out. And one of the biggest questions, again, I don't understand, why is it trading lower? Everything was absolutely amazing. Well, Microsoft had Microsoft Teams this year. They had their gaming coming out. The gaming exploded this year. Actually, we're not going to go into the news on that. So they had, obviously, Microsoft Team, which was competition for Slack and Zoom and all that kind of stuff. Gaming exploded this year again. And obviously, they have their subscriptions with Office now. So why did it go down? If everything was awesome, why did it go down? And I'm going to remind everybody of this because it's just trading, investing 101 is the numbers they came out with are the pandemic numbers. The numbers they came out with are what happened. What you're listening for to buy the stock today, to be investing in the stock, is what the stock is going to do. So now those numbers, the guidance, can they keep this up? Can they keep these amazing numbers up if and when the world starts to get back to normal? That's the question, and that's the discount in the price. That's why the price came down a little bit. So now over the next couple of days, which again, this is getting into the lesson on order flow that we're going to do in a minute. Now everybody's going to crunch all the numbers and say, can they keep this up, have the same earnings yield at the price that it's at right now? And is it worth buying at 261 and where we think it's going to be in the future? As of right now, the answer is no. But that's the initial reaction right after the announcement. So now we have to pay attention to, on the weekly chart, how does this play out? Again, this is all about order flow. How does this play out? How does all the research, the deep pockets, translate this into where they think it's going to be in the next 3 to 6 to 9 months? Okay, so that's the play right now. How are we trading Apple today? Well, obviously it's trading at high levels that it's never been at before, right? The market cap is amazing. Apple and Microsoft still the top 2 market cap in the world, right? We're going to be day trading the stock right now, waiting for the smart money to dig in and then form their opinion, start allocating shares or dumping shares, and then we will just simply hop on their back. That's where trading becomes simple, okay? So earnings for today, Apple, the biggest thing we're going to discuss right now is what's going on with where they are now, new features. The stock pretty much, and let's actually just jump right into Apple stock and just see how that we work the chart. So you can see the diversity, and actually I was going to use different stocks as an example, but you can see the diversity of how Apple has performed while the market has just been exploding to new all-time highs. The stock really has not performed. It really hasn't done anything. Again, it's in the context of what the market's done, it's still actually in pretty good shape. But post-split from last year, when it split last summer, the stock really hasn't done much. It's really pretty much just been hovering, and we can see this on the weekly chart. Now, is that a good thing? Is that a bad thing? It really doesn't mean anything. This is really where traders get in trouble, where you start to predict what you think is going to happen instead of just paying attention. Now, we all know, we've been talking about it day after day after day. 138 is the big level. Well, we need to get out of this box. It's kind of stuck in this window right now. I don't have an opinion on the stock. I do like the fact that it rallied. Now, if you remember yesterday, we talked about accumulation and distribution. And when a stock rallies and pauses, you want to pay attention to the volume coming out of that pause. Right now, we're not seeing extreme volume in one way or the other. So the volume is also not giving us clues. So how do we work this chart? Well, working this chart right now means that we're kind of stuck right here. We also know that 138 is the big level. So if it trades above this level after hours and we stay there, that's going to mean that we have new levels being made. They're paying higher prices, and they believe that, when I say they, the deep pockets believe that the future is brighter and it's worth paying higher prices for. Remember, and we'll shift right over it, and right after we talk about Facebook as well. We'll shift right over after we do Apple stock. We'll go Facebook, and we'll talk about what that means from an order flow perspective. So above 138, again, not this box here, 138, got above 138, got smashed, 138. Above 138 is the level I'm looking for Apple to hang on to after earnings are reported today. Facebook, a little bit different. Facebook actually has performed well. We actually saw it start to perk up over here quite a bit. The interesting thing about Facebook, a lot of the news, especially if you're a digital marketer right now, the average everyday person really wouldn't have any care for this, quite honestly. But the battle between Apple and Facebook right now, with Apple new update blocking the Facebook tracking, which is a big deal for internet marketers. So what does Facebook do? You know, everybody's doom and gloom and everything like that. This is a great article. I'll post a link for this below. Is they're doing the smart thing. And I'll give Mark Zuckerberg and his crew a lot of credit. Is they adapted, which is what good businesses do. They started creating non-advertising revenue sources in the context of what's coming. So they are working on their e-commerce, and they're working on AR and VR, which is smart. That's good entrepreneurship. And actually, I have a lot of respect for that, right? So what's going on here now? So now we actually have two conflicting stories. We have the good news about that they have other revenue sources. We have the bad news, or the perceived bad news, of Apple screwing them, basically. And, well, the bottom line is this. Facebook is a good company. They have good leadership. There's more than Mark Zuckerberg there. He's smart. He brought in other people. We need to get above and stay above 308 right now. That's the number that I'm looking for after hours. Again, I'm not predicting. I'm not forecasting. Revenue, earnings per share, they should all come in line. But now this is different from what we were talking about before with Microsoft, where they're not necessarily pandemic-related revenue soaring and just taking advantage of that time period. I have 308 on my analysis, my numbers. That's the big level I'm looking to get through. What I want to talk about here is, again, I'm going to shift over into order flow, and we're going to actually talk about. Let's actually stick here. So I want to come back to the screen just for 1 second, because this is kind of an important point. We obviously, what we're known for is following the order flow, following the deep pockets. It goes back to the time that I had my trading firm in New York City. I worked with 25 former New York Stock Exchange specialists and NASDAQ market makers, and it really comes down to this. The deep pockets allocate money over time. They don't go in and say, give me 5 million shares today because I think this stock's going up. That's not the way it works. They'll start working the order. And from one day to the second day to the third day to all of a sudden 5 days, you start to see they're paying higher highs. You see that they're holding higher lows. 1 day, 1 week, 1 month. That's what you're looking for on the charts. And the sooner you can start to recognize that, the better entries you're going to get, the better risk rewards you're going to get. And you're going to be selling when everybody who didn't notice one day to 2 days to a week to 2 weeks to a month, you're going to be way ahead of that curve. So I'm going to point out the energy sector, which is what we're starting to look at right now and seeing this. So I'm actually going to come off the screen and we're going to take a look right now. So energy stocks clearly not screaming to the upside, right? You can actually make a case that since the rally that they had, which started in November, kind of petered itself out. But now we're starting to see something change. We're starting to see consolidations leading to a move to the upside. So CPE, FANG, you're starting to see, remember what I just described, 2 days. COP, BLO, HES. You're starting to see consolidations leading to an explosion, which, by the way, and Hess, which actually has earnings today. Something I want to talk about today. A couple of days ago, you'll remember in a video I talked about NVAX, and we were talking about consolidations in NVAX, and we said these 5 days contraction leads to expansion and volatility. Contraction leads to expansion and volatility, right? I kept telling you, pay attention to this. The simple stuff where stocks contract and then they explode. Stocks contract and then they explode, right? NVAX, we talked about it twice, 2 monster days. And again, yesterday followed up with another big day. So how do you capitalize on that right now? How do you capitalize on the only price action you really know, the only chart patterns that matter, which is nothing to explosions, pause to explosion, push and a pause, right? Well, we have the same exact thing happening in Penn over here. Okay, consolidating, and now we're looking for an expansion in volatility. I'm not going to get into more detail, but you can see how I've worked the chart in Penn, and look at that. It's literally resting and giving us 5 days of consolidating. If it breaks to the upside, we'll be all over it because we're ready for the opportunity. If it doesn't, leave it alone. We talked about that the other day. All right, so a couple of other ideas that we want to talk about today. Specifically, I want to talk about AXP. This is actually where we're going to finish up today's video. So in the context of earnings, in the context of consolidation leading to an expansion, American Express came out. Many viewed that the earnings were good. It actually traded lower. The next 2 days recovered pretty strongly. Nice job by everybody who stuck with that trade. And now we're pausing. We're pausing at that level. We didn't get involved on the first time. It spiked right back up to 150. Now, what's going on here? Earnings, rebound, pause. Now we're looking for a breakout. This sets up what we call a really, really good risk reward. And again, I want you to have this in your mind all the time. If a stock you game plan for follows through, amazing. If it doesn't, who cares? Leave it alone. You got thousands of other stocks you could be watching for. So we're watching for this consolidation, which is fueled by earnings catalyst, pause, and now we're looking for the stock to take off again. One other stock I want to talk about today is we mentioned AMD last week, very similar. Actually, let's actually go to the chart and we'll finish up with this one. Speaking of earnings, we actually had, again, keeping things simple, working the charts. AMD actually had this really good, clean move to the downside, paused, kept hitting. Not yet. Got the well bid close with good volume above that breakout level. We took the close. I don't generally hang out, hold this early into earnings. I usually like to get a little bit of a head start. We took this trade just a couple of days ago, and earnings came out in good, and our target is just right around 90 on this particular one. So maybe we'll actually get out and shove it up. But it's not so much about the winning trade. It's more about the setup and the reasons for the trade. I talked to Eric. Look, again, join our boot camp, get involved in it, learn, because all the coaching calls that we have, all of these little details, click the link below. All these details are what separates somebody who's struggling from somebody who turns the corner and sees their account growing every month. It's the little things. It's not just about technical analysis. It's how to read charts. It's how to put those charts into tape reading context. It's how to spot order flow. It's how to spot risk reward. These trades, these explanations that I'm giving you, this is the deeper insight than just learning, is that a head and shoulders pattern? Keep it simple. If you're finding trading overwhelming right now, if you're finding trading where you feel like you know everything but you can't make a dime, I'm going to say this in complete context. Dumb it down. Keep it simple. Just read the raw order flow, read the raw price action, and make decisions from there. That trade in NVAX, go back to the chart, go back to the videos that we talked about. It doesn't need to be complicated, but it needs to be definitive. Again, if you need some help with this, click down, join our community. For the $49 investment, it's crazy not to, quite honestly. You get 30 days and you get to keep the course. If you don't like it, let us know. We'll part as friends and you can keep the course and all the updates to whatever the course is. So if you want my help, definitely let me know. If you have any questions about anything we talked about today, definitely leave a comment. And if you could please do me a favor, if you find some value, click down and subscribe. I'd really appreciate it. And make sure you click the alert, the bell there, so you get updates too. Have a great day, everybody. Don't forget FOMC this afternoon. So make sure, especially if you're day trading, to manage your positions into that 2 o'clock time frame. Have a great day, everybody.